Welcome back to the CPA Revolution. I'm Sharina Padilla here with our tax strategy expert and co host, certified tax coach and CPA, Jose Ortiz. If you are tired of traditional reactive CPA advice and want to turn taxes into a wealth building tool, you are in the right place. Hi, Jose. Good morning. Here we are another week for the CPA Revolution. How was your weekend?
My weekend was great. Thank you. We are at the end of the third quarter. Can you believe that?
Yep, we are surely finishing up strong. We have a couple more weeks to make the big impact and make sure that all the projects that need to be in your CPA hands are in there on time. So
Yeah.
10:15 is right around the corner. But I think like the most fun part starts right after that, right?
Oh, yeah.
Q4 is where the magic happens.
Yeah, that's where we start getting some, I say some, not enough, of our people coming in and asking really good questions about their tax liabilities and so forth. So one of the things that I'm starting to see now is we're starting to get the reps people in, those real estate investors, right? Especially the first time ones, because they're
Mhm.
always scared about if they're doing things right and whatnot. So basically what I do in the last quarter of the year is help them just by reviewing their activity logs. And we're going to get into that stuff right now and just make sure
Mhm.
that what they're doing is it looks accurate and it can pass the sniff test from the IRS. So that's the most important thing. So let's talk a little bit about reps. Serena, I know you get exposed to this a lot as you do a lot of cost segregations. What do you normally hear? Is it because I always get the impression that people think cost seg and they're like, oh, instant write off.
Right, right. And I think it's one topic that I speak about multiple times on a daily basis because
I bet.
everyone's trying to figure out how to turn that passive income into active income, right?
Yeah,
And the first thing they do when they Google it or they go on AI, it's like, well, if you qualify for rep status, real
yeah,
estate professional status, then you can pretty much bring those two items together. And I love how your article, you mentioned the two gates, right? So I'm
yeah,
dying to hear more about that and
yeah.
how you've been able to break it down for people to actually understand what it all means.
Yeah, and by the way, just for all you people out there, it is complicated. It's a complicated thing, but we're here to help you guys out, and kind of just put in normal terms. So let's talk about what I call the two gates. So just think about this. So you're a W-2 employee, right? You're getting killed. Let's just say you're a federal contractor up there. They get the big bucks around DC. And really when you're a W-2, there's not a lot of ways that you can save money in tax. Of course, you can do the 401k, retirement stuff, HSAs, all that stuff. But there's not really this one thing that you can do to help save you money on tax. So it's a bad position. However, we have this thing called reps. And like I said, there's two gates that you have to kind of walk through. The first one, pass, if you want to say that, is you need to qualify as a real estate professional. But then the other part that people don't realize is there's that material participation test that you also have to pass. So it's not just reps, it's reps plus material participation, right? So if you qualify for both, then yes, what happens is your passive losses. So you go to Sharina and you get this beautifully done cost segregation, save you tons of money, right? And you're worried about, whether it's going to qualify, you go for reps. We help you kind of qualify for reps and make sure that you're materially participating, and you get that all up front, right? So you get to use that loss against your active income, helps you wipe off a lot of taxes. It's a beautiful thing, right? But like you said, it's something that is misunderstood and it's not automatic. So let's talk about gate one, qualifying as a reps real estate professional. So basically what has to happen is two things. You have to make sure, and I'm going to read you right off from the IRS, more than half of your total personal services. And when I say personal services, by the way, personal means income that I produce, right? Not capital that I deploy and produce. So personal service, more than half of your total personal services were in real estate, real property trades, or businesses in which you materially participate. First one, right? First, part one of gate one. Part two is you must have performed more than 750 hours of personal services in those real property businesses. Right, so 750 hours is nothing to sneeze at, right?
Mhm.
Particularly if you are a gainfully employed individual working full time and whatnot. So it's not easy. That's why I tell a lot of people, there's some people out there, and I get this all the time. I can do it. I can do it. I can. It's very difficult to accomplish. And then if you do accomplish that, explain that to the IRS, right? So that's where it gets a little tricky. So
the documentation at the end of the day. So
yeah,
understanding that there are these two separate gates, and
yeah,
if you miss either one, your losses will stay passive. So
exactly,
it's so
exactly.
important to make sure that we understand those concepts and
Yep.
what
So
the requirements are to make sure we have the proper documentation
exactly.
in place.
Exactly. So just to kind of summarize really quickly before I get to a little bit more detail about that. Gate one, we have to qualify as real estate professional status, and there's two requirements. More than half of your total personal time was spent on real property in your business, and 200, and then two is 750 total hours. So now let's go into what I was going to talk about here. So I'm going to answer the questions that I usually get. Right? Well, do spouses, if me and my spouse, if we work 300 some odd, whatever, 325 hours, whatever it may be, do we both qualify combined? And the answer is absolutely not. One person can qualify for 750, right? And of course, if you're married and filing jointly, that activates the passive loss on your joint return. But no, you cannot combine those hours. What if, well, you say, well, I'm an employee of a business, right? And how about, and it's involved in real estate. Well, shouldn't that qualify? Well, it does if you own 5% or greater of that business. So if you're just a W-2 and I say just W-2, I said that wrong. If you're a W-2 employee there, that doesn't count, right? Or if you're less than a 5% owner, doesn't count. Right. So very important to note that. Now, what you can do is you can aggregate multiple real property roles. What do I mean by that? Let's just say you're an agent and a property manager. That works, right? Things like that. So you can combine those roles to qualify for the 750 hours. So as you can see, just that piece is complicated, right? So that way, I'm sure, and I always get a lot of questions about that. How can we do this? Because there's a lot of strategy there. If you think
Right.
we can talk about in the beginning when you first start off on this, not in Q4 or
Right.
in 2026. So really important to kind of note that. Now, the second thing that I get a lot of questions are like, well, what does that mean? Real property trade or business. What does that mean? Well, you do any of these, and there's 11 of them. I'm going to give you the top ones, right? Development qualifies, construction qualifies, acquisition, like always, qualifies, conversion, right? Converting the use of that property, operation, management, leasing, brokerage. Those are the typical ones, right? So those are the kind of things that qualify, right? So that's for gate number one, right? Reps. Now let's talk a little bit about gate number two, which is materially participating in the rentals. Totally separate requirement, guys. But what they're saying is, even if you qualify for reps, this is the IRS when I say that, each rental is passive unless you materially participate. And when you do that, you have to qualify for 2 out of 7 total possibilities. Now, what happens is, before I get into those, and I'm not going to list all 7, you guys can read that on your own because I don't want to get people falling asleep here, but the first top 3 really apply to real estate investors, right? So we're going to talk a little bit about those, but you only have to qualify for 2 out of those 7. And in our case, we're going to talk about 2 out of 3. Those 3, I should say, are the 500-hour test. So that means you spend 500 hours on that activity for the year. That's number 1. Number 2 is substantially all tests, and this means that you do almost everything for that activity. So right there, if you qualify for those first 2, you're golden, right? Then you can qualify for reps and you're good. The last one is the 100 hours and no one does more tests. And I'm kind of explaining this not the way the IRS does because it's a little harder to understand, but basically you work 100 plus hours and no other person, right, whether manager, contractor, whatever, works more than you. All right. So those are those tests. Now you might say, wow, so if I have 5 properties, that means I have to qualify for 500 hours each property. Is that crazy? Yeah, that is crazy. That's why the IRS allows you to group them into one activity, right? 469. So you can group them and qualify for the material participation on the aggregate, right? Now there's a trade-off to that though. The trade-off is it delays the release and suspended losses when you just sell one of those properties. So if I sell one of those properties and I have 5, right? And I've grouped them, guess what? That loss, you can't get it until they all get sold. So that's one of those things that you want to talk to your CPA about and make sure that they understand this so they can explain it to you in a good way. But they can explain it to you because those are consequential things. Can you imagine? You aggregate and they tell you, they leave half of the story out. and just say, hey, you're going to qualify.
Right,
Then
right.
here comes your losses, and guess what? I can't use them, right?
For sure, for sure. So let me just recap here, just
Yeah.
so we can keep everyone understanding what we're talking about. So there's two separate gates. Gate number one is your real estate professional status. 750 hours is the number, and it needs to be more than half of the any other activity that you're performing.
Mhm.
The hours cannot be grouped as a couple. Only one spouse must meet these hours solo. So that's huge. What counts would be the real estate operational work, the tenant screening, the repairs, the showings, investor interaction, admin, education, a little bit of like those last three. There's a fine line, right? A gray area,
Yeah.
right? So
Yeah.
you want to make sure that you are logging everything properly. And then gate number two is the short-term loophole, right? Where we're getting either the 500-hour minimum requirement or the 100 hours plus no one else.
Start gate two
That's
again. Gate two is materially participate 500 hours. You said short-term rental, which I'll get into that later.
okay. And then we have gate number two, right? Which is the materially participation for the rentals, right? Which is the 500 hours for each rental or 100 hours, but you have to do everything yourself. No one else in the property, even if you have someone doing your cleanings, every other booking, they cannot put more hours than you do. So that's very important to keep those two together.
Yeah.
The pro taking full advantage of this would be that grouping election. That way you can combine all of these hours into your whole portfolio, but then that has a consequence of not being able to take those passive losses at the time of exit, right? So you want to make sure that you are keeping track and working with a professional, right? I've
Yeah.
told you many, many, many times reactive CPAs, they just file returns, they miss elections, and they waste your cost segregation studies, right? But then you have the strategic CPAs that they're going to work with you on mapping the hours, setting up the logs, and then make sure that they're timing each implementation of your cost segregation studies and doing that model grouping. And that's what's going to benefit you at the end of the day the most.
Bingo. So you did a great job of summarizing. There's some things that were left out, but I understand it because like I told you, it's very nuanced, it's very complicated. So these are why
And
you need.
each situation is different. That's why
Yeah.
you need to know the basics
Yep.
so you know whether or not this may be a good fit, and then work with the professionals that are going to help you fine tune all the little other
Exactly.
details.
Exactly. So let's just suppose you're a W-2, Sharina, you're a W-2, you're like, what do I do at this point? Right? I
Mhm.
don't qualify for reps. I don't know if I can qualify for material participation. What are my options? I have this rental here. What do I do with it moving forward? Well, that's why we have the short-term rental loophole. And we're going to have a separate discussion about that. We'll have a separate show about that. But just to kind of have you guys understand this, if you rent out that particular property an average of 7 days or less. So that means that you take all these different rental activities throughout the year and you group them up and you divide them, and it comes out that you've averaged less than 7 days. Then the IRS says 469 that does not qualify as a rental. Instead, that is considered in our eyes as a business. So guess what? At that point, losses, cost segregation losses, all those
Mhm.
things become active, and then they do apply to your tax return and help you save money on tax there. So that's a key thing there, because if you're working with a CPA who doesn't understand that and doesn't even know to give you that option, then you're gonna have a hard time. You know
Mhm.
what I'm saying? So that's something else you want to consider. Now, you kind of started talking a little bit about the hours that count and don't count. And this is kind of like where I get the brunt of the questions from my clients. Like, what do I do? Like, does this count? Does this count? So I'm gonna start off with this because you mentioned education. A lot of people are confused about that because they're like, well, aren't I like getting educated? Beautiful, but it doesn't count. The IRS sees this. They see it all every year, and that's exactly what they're gonna tell you. It doesn't count towards those hours. So what does count? Well, showings, right? You're showing your properties, tenant screening, like I think you had mentioned before, lease drafting, rent collection, communications with the tenant, those kind of things count. Cleaning, I think you mentioned something like that as well. Handling the turnover of the tenants and whatnot. Maintenance, repairs, obviously. Directing contractors. Now that's interesting because I'm not doing the work. What I'm doing is I'm
Mhm.
directing the contractors. So what you want to do, and this is what I tell my clients, make sure that you have everything on paper. the instructions that you're going to talk to them about, put it on paper, have a plan. Why? Because when the IRS comes knocking, right, and asking about those, directing these contractors or managing contractors, they're going to obviously that's going to raise a flag. And then you show them, yes, here are the plans. This is everything that we did and when we did it. All right. So it's a little extra work. I get it. But man, does it pay back. Right. So things like that, site inspections, buying supplies, going to Lowe's, going to Home Depot, whatever it is. By the way, make sure you get your mileage too. Advertising and marketing, supervising a property manager. Now here's another one. Supervising a property manager, it can get hairy, right? Because you have to see how the IRS is going to see it. Are you managing the property or is the property manager managing the property? Right, so you want to make sure that, again, documentation, you show basically what work the property manager does, how many hours they have in doing that versus me managing the property managers and so forth. Okay. So obviously you want to have those roles very, very clearly defined. So, like those kind of things will be more like decision making, right? So you're working with the property manager comes to you and say, hey, we got to deal with this. Okay, well, let's have a meeting, right? That's where decision making kind of comes in. Organizing records. I'm sorry, not organizing records. That can get a little hairy. Necessary travel is what I was going to say. So yeah, properties everywhere else, that travel counts. If you wouldn't have that property, otherwise, why would you be traveling to Cleveland, Ohio?
Right.
Who does
For
that?
sure.
So yeah, those are the ones. Now let's talk a little about the hairy ones. And I mentioned it, I did it by accident. Organizing records, not so much, right? So anything that's kind of like investor hours, and what I mean by that is you're reviewing statements, you're writing like personnel summaries, you're doing bill pay. Those things IRS is like, that's not going to count. We talked a little bit about education research, right? Oh, but what I'm doing this research. Well, okay, is it integral to the operations? Is what you're doing going to lead to something where we can justify it? Like, are you researching properties or are you just researching market
or
data?
property management software, implementing that property management software,
all that stuff.
things like that are going to improve your business, then yes.
Yeah.
Right.
So you could see, you could see where like it gets really hairy. And this is why so many of my clients come and ask about these things around this time.
Do you have kind of like a checklist or maybe like a template that you use for logging hours? Like, what's your preferred method? Because I've heard over the years from different accountants all over the country, some use specific applications. Obviously, with technology advancements, there's new applications everywhere,
Yeah.
So I'm
Yeah.
curious to know, like, what has worked out for you and how you're making those resources available to those clients that use your services.
That's a great question. So what I tend to find with clients is that, they're either for software or against it. So like those flashy softwares out there, not necessary because, it could add added cost to me and to them and whatnot. So I have templates. I have Excel templates that I use. There's a workbook that I provide my clients. And I also accompany that template with a guide, right? So I do have a guide so they can always go back and ask or research those questions before they ask, maybe save some time there. So I provide those things to them. And I ask them to basically complete them to the best of their ability during the course of the year. And then of course, we can always review those at our quarterly meetings, right? It's really important because that way you can kind of do that and prevent having to go back. It's December and now you want to talk about what you did in January.
Right. That's why it's so important to have those proactive meetings and check what's been happening. And if you need to make any adjustments, then you could take care of that and not have to deal with
It's
a big
critical.
monster
Yeah.
the next year, right?
It's critical.
When you can't do anything about it.
I know. And then the other thing too is like the other challenge that we've had in the past with some clients is taking the hours. Look, guys, and this is what I always say. If you're going to play basketball, you got to get on the court, man. And you got to play by the rules. That's it.
Very simple.
That's it. There's no other way around that. There's nobody's going to do it for you. You got to do it. Same thing with the mileage, because all of this stuff counts. You're going to properties, you own these different properties. You're not taking mileage. You know what I mean? Just because you don't want to or you forget it, you're not inexcusable. Remember, we're here to help you save as much money on tax. So you guys got to play by the rules. So
and be intentional, right, with your time.
Yeah. Yeah. So, you get these CPAs that you're working with and, they don't know these rules. Well, how can that cost you? Let's say, obviously, ahead of just forget about everything else I'm about to talk about now. Let's talk about how not planning at all costs you. Right? You don't even know at that point what you don't know. Right. So imagine that. And then once we do start talking, right, not planning for the hours, right, not defining what roles we have, which is it's a great idea for someone who's starting off in this. Define your roles. right? Maybe you're not going to get everything, when you sit down and brainstorm initially, but at least have a core definition of what roles you have in this business, in this real estate property
Mhm.
business. And then as you start kind of getting engaged and you find out, well, I'm starting to do more of this stuff, then you add that. But you're defining your roles. You're saying, this is what I do. This is what my property manager does. This is what my husband does, whatever it may be. Right. That's the first thing. You're working with a CPA at the end of the year. Like I said, you have 5 properties. Maybe you hit a bonanza and you bought 5 properties, and now you don't know how you're going to qualify for all of this stuff. And he
Mhm.
never mentions to you that there's a grouping election, and he
Right.
never and if he does, he or she mentions the grouping election, but not the cons. He mentions the pros, the
Mm.
cons, right? So another way, cost segs, and girl, I know you could talk about this all the time. Bad timing on cost segregations, right? First of all, they may not know what a cost seg is. That's the first thing. But then you're right. You want to talk about cost segs after you already failed reps, right? Which makes you basically, it's not going to do anything for you at that point, right?
Right. Right.
Luckily, we have people like Miss Sharina here who actually knows enough to be able to consult with these clients and tell them it might not be the best time, right? But what if you don't? What if you do it
Yeah.
online with all these other cost seg kind of people, right? These are people
Right.
sell sheet.
Yeah, I always like to say, yes, cost segregation, it's a powerful tool, right? But you need to know when you're going to use it, right? And
Exactly.
that's just one of the various strategies that I bring to the table, right? We can stack different items together, and working with your CPA and having that collaborative relationship, we're going to be able to figure out what's best for you. It's not just a matter of buying a property, you completed the acquisition, you did a cost
Yeah.
tag, and then magic happens. No, it doesn't work like that. There's a lot of thought that goes into it, and each person's situation is unique. And we need to get to know you to be able
Yeah.
to guide you through the next steps, right? And having a team and a collaborative approach is what's going to help. So it's bring everyone together and make
Yeah.
sure that we are all working towards the same goal.
Right, because and you hit it on the head, because let me tell you something, and I've told you this in the past. I've had experiences where I knew there was a cost seg.
Mhm.
I didn't see it until I didn't see the paperwork until God knows when, right before filing. I would know that there's a partial disposition of a roof because the client had mentioned it to me, and it's not there.
Right.
And it looks like it was done in Excel. So I'm talking about from a CPA standpoint, you want to have that kind of person on your side. You want to have a CPA who obviously understands what a cost seg report looks like, can decipher the cost seg to see if it's of quality, and also talk to the cost seg people and make sure that they're of quality, because you go for cheap, you're gonna get what you pay for, right?
Yeah,
Yeah.
yeah. And a lot of what we're seeing in the industry, it is unfortunate because they are just using a spreadsheet to draft some numbers in
Yeah, it's crazy.
Excel and lump all of your asset into one big bubble and then just carve out a couple pieces, and that's your accelerated depreciation benefit. But there's so much more beyond that, right?
Yeah, yeah,
The real property you just mentioned, there's partial asset disposition, there's repairs and maintenance. So if you're not working with engineers and project managers that actually understand
yeah,
construction and that are able to decipher all of these items and put them into paper with actionable points for your CPA to take into consideration, not just for the immediate return, but also for the future, because chances are you're going to own that asset for many years. You want to be able to have a comprehensive analysis and evaluation in front of you that you can treat as a living and breathing document with your CPA. So you get what you pay for. And at
yeah,
the end of the day, we're here to help. Our prices are not like a huge comparison, right? They're
yeah,
still reasonable. We're not the most expensive ones on the market, but we're doing and delivering premium work. So do
yeah.
your homework, get familiarized with the different types of variations of a cost segregation are out there, because not all cost segregation studies are created equal.
Yeah, and now we have. I mean, AI is great, but with the advent of AI comes all of these other things that people trying to make all these shortcuts. So
Mhm.
the other day, I came across one that one of my clients was looking at, and they don't offer a site visit. They don't offer a site visit. Like, how could you defend an audit if you
Right.
didn't even get on site?
Right.
So guys
And the
got to be
audit
careful.
technique guide says it very clearly that the seasoned professional that's doing the cost segregation study, they are part of their training to get certified to do these studies is that they must visit the property, they must record
Yeah,
the existing conditions, and document everything that is happening with that property since the minute they visit that, right? So it's very important that you understand what are the requirements and that you are hiring a professional that is going to provide you with an audit proof report.
Yeah. And I know we went off on a tangent there because it's like one of my pet peeves. You know that. That's why I'm so happy that I have you, Sharina. But it just gets to me.
Happy to have you too.
Yeah. So what's the other thing that kind of, these are the kind of things that drive me nuts at the end of the year, since we're talking about cost X. No logs. So they'll come to you, or they'll come to you with a bunch of different paperwork saying that he did this and this and that, and expects the CPA to do that, to put together a log for them. Absolutely not. That does not fly. So that's why you want to make sure that that CPA, and you may not like that CPA for doing this, but he's on your butt. He's on your butt, and he's making sure that you're doing those things, because guess what? At the end of the year, that's the difference between a good tax year and a bad tax year, right? So you want to do that. Don't get annoyed. I know that some of us could be annoyed, not me, but you know, those are things that you want to appreciate that your CPA is doing for you. So that's the other thing. The other thing I'll tell you about too is we talked a little bit about, you know, that grouping election. And if that CPA is not modeling that out for you, that grouping election, and he's just saying, hey, I'm going to just, you know, elect it and then whatever, that's a problem, man. Because here's the thing about it. You're going to do that without understanding what's the plan moving forward, right? So you're not proactively looking and saying, hey, Sharina, you want to sell, you want to group? Okay, fine, so you can qualify. But what's the plan for those other properties, you know? Because depending on what happens, you might have some passive losses locked in until you get rid of all this stuff. So what's the plan, right? So you want to kind of give them that purview, I guess, that sight ahead, that vision, so they can start thinking about it and understand that everything that we do here is consequential, right? Mm-hmm. So that's basically what I kind of say are the things that, you know, a CPA, a proactive CPA, can help you avoid, right, and get you going on the right foot.
That pretty much encompasses that tax planning service, right? It's like that's what a tax planner is going to do for you, right?
Exactly.
You're just looking for tax preparation, you're not going to get any of it. But if you want strategy, if you want planning, implementation, and then execution, right?
Yeah.
You need to be able to you know, make sure that you are selecting the right service for your portfolio.
Yep. And even just that tax planning, that has a bunch of different definitions depending on the person is. When we talk about tax planning here, we're not talking about, hey, call me in December and see what kind of things I have, what tricks I have up my sleeve. No. Yeah. What we're talking about is actually meeting with your CPA periodically, hopefully at least four times a year, and walking through your tax scenario, having them do a tax plan for you. If that person is seeing that you have a lot of low-hanging fruit that you can take advantage of right now and save big money, then continuously monitoring with you know, your situation, and you know, your life changes, right? You're not the same person you were last year, right, Sharina? A lot of things have happened, right? So same thing with your finances, right? It's all one big ball, and you want to make sure that you have everything, every corner covered. Now, and we're going to end it with this one. What does the IRS look for? So they're going to come in and they say, hey, now, hold on, Mr. Reps or Mrs. Reps. Let's take a look at what you got here. Let's see how your records are. So what are they going to look for? Well, they're going to ask, is any activity not a rental under code 469? Meaning, are they short-term rentals maybe? Are they not considered a rental, right? Per definition? Then they're going to say, hey, Miss Reps, who did what? Talk to me. Who did what? What did you do? Okay, where is that? Can I see that? Right? Your husband did what? Your daughter did what? And you're paying your daughter? Oh, let me see that.
Yeah, exactly.
So you can see how it starts going down. It's not that they're going to, okay, here's the thing about the IRS. It's not that they're going to look at everything. It's just that once they get into one thing, it's kind of like that little ball of string, right? That sweater.
Right. It's just going to keep going. So have a clear org chart for your operation.
Right.
Make sure that you're not talking about anything outside what's already listed there. That's
Exactly. And then the daily logs, right? And I call them daily, right? The who did what, the emails, right? We call them artifacts in the article. Work orders, email, everything. You want to be a pack rat here. Like, right? Nobody likes a pack rat, I guess. But you want to be a pack rat here, right? You want to make sure you save everything, and that you're very intentional, like you had said, I love that word, about kind of making sure that you're protecting, right? You're curating things so that if that day should come.
And one tip that I want to share, because most of us do it that are in this business and also involved with other businesses, have a dedicated email account for that specific property. That's going to save you a lot of time.
Yeah.
You know, have your dedicated calendar, your email account, and do everything through those items, and make sure that you are, you know, setting yourself up for our success, because sometimes we do it to ourselves, right?
Most of the time.
Yeah.
Most of the time. So daily logs and artifacts, right? So again, it's like that. You want to protect things. You want to protect the documents that you get and all that other kind of stuff. And you want to be anal with your vendors, right?
Mhm.
Make sure that they have everything. Make sure that they've itemized those invoices out, because that has effects for other things too, right? They don't clump things together. They don't just put, labor hours. No, I want to know the labor hours for what job. Things like that. More than half. Remember how I said more than half of the hours are spent in real estate, right? Real property activities. They're going to ask you about that. They want to see, where you've been spending your time. And then of course, the grouping election, right? If you group rentals, did you attach the statement, right? And have you been consistent with that? So those are the things that they're looking for. And it all goes back to record keeping. And it all goes back to, if you don't know, hire someone that does, so that you can avoid this in the first place. That's what I got.
Beautiful, beautiful.
Yeah.
All right, Jose, I think we're gonna be able to learn a lot more through your article, and happy to answer questions that anyone may have about what we are doing to support you in this journey. And just keep in mind that, we hear all these buzzwords, but let's stick to the facts, right?
Yeah.
And, be conscious that you want to do what's best for you and you are worthy of it, right? It's, don't settle for average. That isn't enough. It's
Exactly.
expensive. So we'll see you on our next session, and look forward to hearing your feedback, questions, comments, anything else that you would love to learn about. Let us know. We are here to serve you.
Yep. And I got one more thing before we go. I am going to post my little Excel sheet in the chat. So when this actually publishes, I'll go ahead and post that out there so you guys can have that. And then if there's any questions, you know where to find us.
All right. We all love free giveaways.
You have a great day, Sharina. We'll be talking to you guys soon.
You too. Have a great day. Take care.